buyer coming in and getting jammed at lower prices. They were always getting jammed at higher prices. Well, that could still be profit taking. It's not until we see this 205 lot buyer getting jammed at lower prices that suggests that's not just profit taking. Profit taking is at top edges. That's somebody crossing the spread to get short. And obviously the sell away from that block has given you this very, very nice ride out of town from 45.10s to 44.96s, which is exactly what you were looking for, to give you a little bit of a runner trade, which always helps boost the account a little bit, doesn't it? And that's taken the S&P max total to $6,000 for the day, $6,000 for the day now on the S&P. That's us exactly at the $6,000 mark. Profit taking is nearly always done by limits, Miguel. They have a target, they stick around for that target, and if it doesn't hit the target, then you normally see them coming in with it. A lot of the times what they'll do is they'll start selling before they pull away their limits. And the reason for that is they're trying to still drag the liquidity higher. So if they sell into that before pulling away the limits, they can sometimes achieve that objective. So yeah, you normally see the profit taking is a limit price because it's a target, it's a specific price they're looking for, and you normally see those ICE orders. But when they cross the spreads and you start seeing them selling, selling at higher prices or buying at lower prices, you start saying, nah, that's not right. That's not right at all. And here's a couple of examples in the background actually in the S&P. You can see that all of this trade here all took place at higher prices. So these buyers took place at higher prices. This buy took place at a higher price. This buy took place at a higher price. So what are you being able to recognize from that? Not a lot, because they're all taking place at higher prices. But when this buy here took place at a lower price and got jammed, that's somebody crossing the spread to accomplish that, isn't it? So at that stage there, at this stage here where we've got this shaded area, that's now visible for somebody looking at that. If they're looking for that sell trade, that is now something that somebody looks at and goes, wait a second, that's giving us a bit more of a storyline. So for example, when we see this selling and it seems to be coming in at low prices, but it seems to always be slightly higher low prices, suggesting that there is somebody crossing the spread, because if it's always at a limit order, well, this couldn't happen and this couldn't happen unless it crosses a spread. Do you understand, Miguel? So if it's a limit order, you shouldn't be getting filled in these areas because it should always be at lower prices. So the fact that these guys are getting filled means that people are getting a bit edgy, that they're not going to get those lower prices, and then the buy rips significantly higher off of those prints.